Today, I want us to talk about your tax advantaged accounts in Canada. Tax advantaged accounts that you can use in your journey to building wealth in Canada. Hi there, welcome back to my channel. My name is Dotun Afouda, your favorite independent licensed insurance advisor from Ottawa, Ontario, Canada. I hope you've been enjoying the videos, and I want to ensure, please make sure you like, subscribe, and share, because these information are information that people around you need. You find it valuable, those around you would also find it valuable. Let's dive straight into it. The first and most popular tax advantage account in Canada is the tax-free savings account. That is the official name, the tax-free savings account. And the idea behind this account is that the government wants to encourage you to invest towards your future. So the government says, whatever investment you make through the tax-free savings account, you can withdraw your gains or your interest or your dividends, whatever you are earning from this account, you can withdraw it absolutely tax-free without thinking about taxes. Now, the tax-free savings account, what are some restrictions to it? One, the maximum right now in the year 2025, the maximum you can put into the tax-free savings account is $7,000 in 1 year. But the great thing about the tax-free savings account is that from the day you land in Canada as an adult, as 18 years old and above, either the day you land in Canada as an adult or the day you clock 18 in Canada, if you were born in Canada or if you arrived in Canada before the age of 18, your contribution room for the tax-free savings account starts to accumulate, and it accumulates as the years goes by. So for example, if you landed in Canada last year, 2024, your contribution would be $7,000 for 2024 and now $7,000 for 2025. So if you have not contributed to your tax-free savings account at all, you would have a total of $14,000 contribution. So now, because of that accumulation, it means that you won't miss out if, for example, in a particular year, you are not able to contribute up to the maximum amount. So that is the tax-free savings account. In my next video or in other videos, I will go deeper into how people misuse the tax-free savings account. But let's stay. The second account that is tax advantaged in Canada is your Registered Retirement Savings Plan, the RRSP. The RRSP is an account specifically designed to work as your retirement planning account for you to invest towards your retirement. Now, what is the tax advantage of the RRSP? The RRSP tax advantage is that any amount you deposit into the RRSP, one, is tax deductible. Tax deductible meaning you can deduct that amount from your taxable income and reduce your taxable income. So for example, if you earn $90,000 a year, or you are supposed to be taxed on $90,000 a year, and you take, in that year, you take $10,000 and deposit it into your RRSP account, what that means is that you would only be taxed on $80,000 because $10,000 now becomes non-taxable. So if you have already been taxed on that $10,000, that money will be returned back to you by the CRA at the end of the year. Now, many employers would have some form of matching program or pension program or pension plan, right? Any of those plans uses your RRSP contribution. Just like the tax-free savings account, there is also a limit to how much you can contribute every year into your RRSP. And that limit is determined by how much you earned in the previous year. So for example, if you want to know your 2025 RRSP contribution limit, you need to look at how much you earned in 2024. That will determine how much contribution room. So it's usually 18% of your taxable income in 2024, up to a maximum, right? I think the maximum now is about $31,000 or $36,000 within this range, but there is a maximum. So even if you are earning 300,000, it's not going to be 18% of 300,000. Or if you're earning $1 million, it's not going to be 18% of $1 million. There is a maximum cap of that 18%, and that forms your RRSP contribution. Just like the TFSA, your RRSP contribution also accumulates. So if you don't use it up in a particular year, you have that space in the next year. It will be added to your contributions. So it's the most popular retirement planning account in Canada, although if you ask me, it's not the best, right? But I won't get into that now. We will talk about that in another video. So that also reminds me, for the RRSP, there are also withdrawal restrictions. So the withdrawal restriction for the RRSP is that you must be withdrawing to fund your retirement. So RRSP allows you to start withdrawing, I think, from age 65. So from age 65, you can start making withdrawals from your RRSP. Also, the gains you have in your RRSP, right, is tax deferred. So it's an investment account, right? So let's say you invest it, it's growing over the years. So you don't pay taxes as the money is growing. But when you get to retirement and you start to make withdrawals, you then pay taxes at that time. So RRSP is tax deferred. So it allows you not to pay taxes today, but you will pay taxes when you get to retirement. Now, the next tax advantage account you have in Canada is your first home savings account, the FHSA. Now, this account was launched in late 2023, and the idea behind the first home savings account is simple. Is to help Canadians is to save and invest towards buying their first home as quickly as possible. So the first home savings account, what it does, it combines the advantages of the RRSP and the advantages of the TFSA and puts it together. So what does that mean? It means whatever you deposit into your first home savings account is tax deductible. And when you invest that money and it grows, whatever gains you have on that money, you can withdraw that gain tax-free in order to buy your first house. And just like these two accounts, there is also a limit to it. The limit being the maximum you can contribute into your first home savings account in a year is $8,000. Now, the first home savings account also accumulates its contribution room, but the maximum contribution room you can transfer into another year is $16,000. So let's say you open your FHSA account in 2023 and you didn't use it. So you opened it with $100 and you just left it like that. So 2023, you have 7,900, and then 2024, you have 8,000 contribution room. Let's say you didn't use it in 2024. Now 2025, you have 8,000, and then you are able to transfer 8,000 plus 7,900, which is 15,900. You're able to transfer 15,900 into 2025. Now, in 2026, you will not be able to transfer more than 16,000 into 2026. So there is a cap to how much you can actually transfer into the next year for your first home savings account. And there is also another restrictions to the first home savings account. All the money you put into the first home savings account and all the tax advantages you have gotten, the only reason for withdrawal must be to buy your first house. If you are withdrawing for anything else, you will lose all that benefit and you have to pay all your taxes back, right? So there is withdrawal restriction for the first home savings account. So these are the three main tax advantage accounts you have in Canada. Again, the tax-free savings account, the registered retirement savings plan, and the first home savings account. So if you're planning for retirement, if you're investing for your future, you're planning to buy a house, you might want to look into these tax advantage accounts, because your first thing to think about is how to reduce how much tax you have to pay. Now, on top of this, there are other tax advantage solutions you can use that I will talk about in another video. It is not an official government tax advantage account, but it's a kind of investment account that allows you to also enjoy tax advantages. Most people don't know about it, but I will talk about that in my next video. So if you're in Canada and you don't know about the registered account, now you know about the registered account, and then you can use that to build your wealth for the future. Thank you for watching my video, and I hope you continue to like, subscribe, and share. See you in the next video.